Yo guys, SefFX here. Welcome back to another video. Today gonna be demonstrating to you or teaching you or showing you how to identify the Six Sister profile. I believe like ICT teached this study in one of his few recent videos within the past few months, right? And it took me a while, I'm not even gonna lie, it took me a while to like get a basic grasp of how it actually works until I was actually able to identify it within the chart, you know. In simple terms, it's when correlated pairs become non-correlated. If in other words, let's say we have I personally use this for features, right? We can say, okay, let me do it like this. We can say this right here. Okay, let's duplicate it like this. 3 sections like this. Then increase this like this like this. It's kind of like an SMT divergence, right? But it's when price actually fails to fill an SMT divergence. In other words, we have these three features, which is the S&P 500. Sorry. S&P 500, which is this one right here. Then we have the US 30, and then we have NASDAQ. So in basic and simple terms, we all know that these three features are regarded as correlated features. In other words, when one is bullish, the other two is expected to be bullish, right? So in other words, when one violates a high, let's say S&P violates a high like this, and US 30 violates a high like this, you know, when price violates a high like this and NASDAQ fails to violate a high like this, right? This is recorded as an SMT divergence, right? So how do we identify the Six Sister profile, right? It's when typically all these markets are yet to be synced. In other words, all three are heading to violate the high. In other words, they are going to correlate or be in sync, if that makes any sense, right? And like the simplest way I managed to identify how the Six Sister is gonna form, right, is when, let's say, two of the symbols, which can be, let's put it like this. We'll use a Fibonacci gap within this case, like this. Then we have US 30 like this. When they both manage to violate, okay, in simple terms, when S&P 500 violates a low like this and it pushes bullish, and US 30, you know what, in simple words, I'll do it like this. S&P 500 creates a high, it reaches a discount array, and then violates the high, right? Buy side or buy stops. US 30 creates a high in sync with S&P 500, reaches down into a Fibonacci gap, right? Or discount array, and then violates the high, right? And then now we have NASDAQ. And bear in mind, this can be any of these three uh symbols. It's not per se gonna be Nasdaq, right? As Nasdaq creates a high and then targets the low, while S&P 500 and US 30 have already violated the high and have visited the fair value gap, right? By the time when US 30 and 500 and S&P 500 have already violated buy side or hit buy side, Nasdaq just managed to reach the discount array. In other words, we call this the 6-6 profile because price is behind within these two pairs, if that makes any sense. So like we anticipate Nasdaq heading or having the potential to violate the high. In other words, simple terms, we can have, let me remove this. We can have let's just say right, S&P 500 and US 30 violate this high, like S&P 500 and US 30 violate this high at 11 a.m. New York time, right? It can be whatever time, at 11 a.m. New York time. And Nasdaq by the time has not even violated the high. It just managed to reach the fair value gap, right? We anticipate Nasdaq going back to draw its liquidity on the buy side that has already been violated on S&P 500, US 30, and now Nasdaq. So when it's 11 and these two have violated this high, Nasdaq just managed to hit the fair value gap to still yet violate this high, and it may potentially maybe violate the high by 12 a.m. if that makes any sense. The time is just a simple way to like explain it, if that makes any sense. So like right now, I'm gonna try showing you this within the live markets, and you will have to go back test and learn how to identify this profile, right? Okay, let's begin with S&P 500, right? In other words, SPX. If we can pay attention, let me go to the 15-minute time frame. Okay. If we can pay attention, right? S&P 500 managed to violate the London low, which is identified right here, and violate buy side right here. Buy side liquidity. We can remove this. So price on S&P 500 dropped down to the most recent lows, right? Equal lows. This one points at my interest because it's the New York lunch sell side, right? Just right before the PM trend, if that makes any sense. So price drew down, violating these lows, and broke out of this highs right here by 10:45. 10:45, as you can see down here. It's not clear. Let me just increase this like this. Okay. So buy side was violated at 10:45, right, on S&P 500. On US 30, we pretty much have the same thing right here. This is our buy side liquidity that was just violated, and if you pay attention, it was violated first per se by 10, just by 9:30, pretty much when the market's open, right? So S&P 500 and Nasdaq were regarded as behind. So this is a clear indication that the other two symbols are still yet to pick up, right? Sell side right here. If you pay attention to this low right here, this is 12:30, which is pretty much the New York lunch sell side, right? and this high was pretty much pierced at 9:30 when the markets opened, right? Now going into Nasdaq, if we can pay attention, let me just hide this. Okay. At 9:30, Nasdaq just had managed to violate sell side right here, which is the New York launch. If you can pay attention right here, mark it out as New York launch sell side midpoint, right? And then our entries when we're expecting, when price, as soon as price, and if you pay attention right here, price was violated at 11:45 on Nasdaq. So it was pretty much behind S&P 500 and US 30. Going back into S&P 500, the high was violated at 9:30 at US 30. This high was violated at 10:45 at S&P 500, right? Now at Nasdaq, it was violated at 11:45. So pretty much per se an hour from S&P 500, right? So US 30 managed to violate this high first, and then came S&P 500, and then came Nasdaq, right? And pay attention to the fact that they all managed to violate the New York launch sell side. So that was pretty much the next strong liquidity. This was our high probability reversal point, right? So when I'm looking for bullish confluences or a form of justification for me taking a long, right, I'm expecting price, as soon as it violates sell side, to target a discount array, right? And if we pay attention right here, price nearly reached this right here. On higher time frame, this would be potentially an order block, but I was able to identify this right here. We cut through candles, inverted fair value gap, right? So price violated New York sell side, targeting an inverted fair value gap. As ICT said, when they're inverted, we treat them as a form of support to move price higher, right? And I personally wasn't targeting this high. I knew, or was expecting, I wouldn't say knew, I was anticipating, expecting price to potentially violate this highs right here. But I identified this right here as a form of a breaker, right? This was my initial target for the long trade. You could have pretty much held it towards this high right here, but honestly speaking, that was not my initial target because I just didn't like the way price is moving on lower time frames. You could have as soon as you identify these order blocks right here, you could have taken your long within this area right here, going bullish. But I was able to, or I managed to identify a fair value gap on the 3-minute time frame, which is from this area right here, this zone right here. Let me just zoom in. This zone right here to pretty much this low. And if you pay attention on the 1 hour, the 1 minute, it's more defined, which is pretty much this range here to this range here. So when you identify, or when I identify a fair value gap, I would tend to go on to the next session or the next form or a time frame below my current time frame where I identified my fair value gap just to refine price, right? So I took a trade within pretty much this zone right here, just as 10 hit, because we begin to look for trades from 10 going to 11. That's our silver bullet area in which we execute our trades. And I was still expecting price, in case price didn't respect this fair value gap, right? I was expecting price to pretty much respect this order block here by forming this mitigation blocks right here. And mitigation blocks should not close below 50% of the current order block, which is pretty much the min threshold. If that makes any sense. So like right now, I'm just gonna show you my execution examples. Trading executions. Yeah. So first trade was executed right here within this fair value gap right here. Second, as price was trading down, I took a trade the minute price hit this 3 minutes order block going bullish. So price stacked up. I identified another fair value gap right here, just around this area right here, and it's more clear if you identify it on the 5-minute time frame, which is right here. So the minute price purged through the fair value gap high, I executed another trade, still targeting this zone right here, which I identified or marked out as a breaker. And when price started ranging like this, personally, I would say I became impatient and just closed the trade, even though I was expecting price to pretty much move bullish. So I wouldn't say psychology kicked in, but bro broke his rules. It happens to the best of us. But yeah, so I hope everybody found this video informative. Hope you found this helpful. And if you did not understand anything, be sure to hit me up in the comment section, and I'll be happy to help you out. Hope everybody stays safe, stay blessed.